Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class we have solved the problem of Nikki, Nisha and Neha. Nisha and Nikki, right? Today let us move on to the next problem, problem number 11, page number 74 of your question bank. Page number 74, problem number 11. I will read out the problem and in the meantime let us analyze and we will solve the problem. Yes, Arun, Kiran and Arjun were partners sharing profits and losses equally. Remember friends, profit sharing ratio will be 1:1:1. That is 1/3, 1/3 and 1/3 equal proportions, correct? Their balance sheet as on 31st March 2018 was as follows. Balance sheet given. Let us take up liability side first. Sundry creditors, no doubt external liability should be transferred. Then bank loan. Bank loan is an outside liability. Banker is nowhere the partner of a firm, isn't it? So outside liabilities, so transfer it to realization account like normal liabilities. Arun's loan. Whether Arun is a partner? Yes, Arun is a partner. So it becomes internal liability. Internal liability, so it should not be transferred to realization account. What should be done with Arun's loan? It should be paid through the cash or bank account. In this case, cash at bank is there, cash in hand is not there, so we will pass all bank entries, correct? Bank entries. So the loan of Arun should be repaid through the bank account and it should be paid after payment of all external liabilities, but before making the payment of their final capital balances. Before making their final capital balances, their final settlement, we have to make payment of, that is Arun's loan. Clear? Yes. Now, next part is reserve fund is there in the balance sheet. You know it very well. Straight away transfer it to capital accounts of partners in their profit sharing ratio. So it is there on the liability side, transfer it to credit side of, that is partners capital accounts. It is accumulated reserve. Then capital balance is given, that is the opening balance, isn't it? Opening balance of capital by balance brought down in their combined capital account. On the credit side we have to make an entry. Then moving on to asset side, cash at a bank. So opening balance of bank balance, opening bank balance. So when you open bank account, on the debit side, to balance brought down, because bank appears on the asset side, all assets shows debit balances. Clear? So to balance brought down. Then what else? Bills receivable, debtors, stock, investments, furniture, buildings. All are tangible assets, should be transferred to realization account. All should be transferred to realization account. Let us move on to the adjustment part. On the above date, the firm was dissolved. Firm was closed. Information is available. The assets were realized as follows. Bills receivable, debtors, stock, buildings. So 4 assets have been realized. It is given, the value of realization is given. So we will enter on the credit side of realization account, that is by bank assets realized, and we will write one by one, isn't it? How many assets are there to sell? 6 assets are there. What about other 2 assets, isn't it? So let us see. Investments and furniture were taken over by the partners. So it is done. Remember, whenever an asset is taken over by a partner, it will not be available for sale. So while selling the assets, you should not include these assets there also. Just ignore it while selling the assets, and while dealing further interest, you have to pass separate entry for that, that is partner's capital account is to be debited or credited depending upon the asset or liability taken over by the partner. If asset is taken over on the credit side itself, isn't it, by partner's capital account. If liability is taken over on the debit side to partner's capital account, that's all. Because when you sell, you will pass entry by cash on the credit side. So an asset is taken over by partner's capital account, that's all. When you make payment to liabilities to cash or bank, isn't it, you will make the payment on the debit side to cash or bank, liability is paid off. If it is taken over by the partner, to partner's capital account, very simple. But make sure that once the liability is taken over by the partner or asset is taken over by the partner, it should not be included under, that is a payment of liability or asset realized. There you should not include it. Is it clear? Then investments were taken by Kiran at rupees 10,000. This is a value of asset taken over, it's given, and furniture was taken over by Arjun. So don't forget to pass the other part of the entry in capital account, combined capital accounts. You have to pass it on the debit side to realization account, isn't it? Asset taken over. Then all the liabilities were paid in full. So you have no headache here, no need of calculation, straight away to on the which side? Debit side of realization account, you have to write to bank account, liabilities paid off, the entire, that is whatever you have transferred, sundry creditors, bank loan, isn't it? Two liabilities are there, so make payment. Dissolution expense amounted to rupees 2,500. So you know it very well, to bank expense or dissolution or cost of dissolution or realization expenses enter on the debit side of realization account 2,500. That's all, your problem is solved, isn't it? Very simple. So let's start realization account. Realization account. Realization account. Yes, write debit credit, provide for JF column, amount in rupees, that's all. Yes. Transfer all assets, particulars JF amount in rupees, debit credit written. Yes, let us start. Realization account to bills receivable 6,000 to bills receivable account 6,000. Then debtors 25,000. 25,000 to stock 20,000, stock account 20,000 to investments 8,000, investments account 8,000. Yes, next asset is furniture, right? Furniture, let us start 10,000, furniture 10,000, then next one is buildings account, how much? 85,000. That's all. No other assets. Let us transfer all the liabilities now by sundry creditors. Account. Sundry creditors account, how much? 12,000. Then by bank loan, bank loan account, how much? 24,000. 24,000. Then let us sell the assets by bank account. Under that, assets realized. Assets realized. Assets realized. Let us sell the assets. Bills receivable. It is given in the adjustment part. Bills receivable inner column 5,000. 5,000. Debtors 23,500. 23,500. Stock 18,000. Stock 18,000. 18,000. Then buildings. Buildings, how much? 95,000. 95,000. That's all. Only 4 assets, right? The other 2 were taken over by the partners, correct? Yes. 1,41,500. 141,500 is the total. Then asset taken over with, now let us make payment of liabilities to bank account. Liabilities paid. Liabilities paid off. Write one by one. Creditors 12,000. Creditors 12,000. And bank loan. Bank loan, how much? 24,000, correct? 24,000, total 36,000 in outer column. 36,000. Yes. Now, next is we have to pass entry for asset taken over by the partners by investments taken over by Kiran, right? Kiran. Investments were taken over by Kiran. Yes, it is. By Kiran's capital account. Kiran's capital account. Investments taken over. Investments taken over. Write the amount. How much? 10,000, right? Yes. 10,000. Then the other partner, Arjun's capital account. Arjun's capital account. Capital account. How much it is? 8,000. Furniture taken over. Furniture taken over. Isn't it? That's all. There is one more expense paid by us to bank account. Bank account, what is that? Dissolution expenses. Dissolution expenses. Dissolution expenses, right within the bracket. 2,500. 2,500. That's all. No other entries. Close it. Find out the difference. Credit side total is greater. So write the total of credit side first. Leave some gap here to transfer the profit. Correct. Because there is a profit here. 195,500 is the total. 1,95,500 is the total. Write the same total on the other side. 195,500. 195,500. Yes. What's the difference? 3,000. 3,000 is the difference. distribute it among the partners. So they are equal partners, right? Yes. Profit and losses equally. So 1/3, 1/3 and 1/3 to all partners capital account. Capital accounts. Under that, Arun, I will write AR, Kiran, I will write K, and Arjun, I will write AJ. You just write in full, okay? 3,000 into 1/3 is equal to 1,000, and for all other partners, same amount. 3,000 into 1/3, 1,000, and 3,000 into 1/3 is equal to 1,000. That's all. Right here, profit on realization. Profit on realization, balancing figure. Balancing figure, that's all. Your realization account is done. Now let us move on to the other part, that is combined capital accounts of partners, right? Combined capital accounts of partners. Yes. Draw the columns debit, credit, then particulars. Arun in rupees, Kiran in rupees, and Arjun rupees. Write the column headings quick. Do it fast. Kiran rupees and Arjun rupees. Arjun rupees. Over. Let us start with the capital balance, credit balance, right? So by balance, brought down. How much? 40, 30 and 20, right? Yes. 40, 30 and 20. Refer balance sheet. There is a reserve fund on the liability side. How much? 12,000. Transfer it by reserve fund. 12,000. Share it among the partners. Equal proportion. So 1:1:1. Reserve fund. Total amount 12,000. So 4,000 each, right? Yes. 4,000 each. Then what? Next, assets taken over by the partners. Before that, there is a profit on realization, right? So realization account debtor to all partners capital account. So all partners capital account is credited by realization account. Realization account. Profit. How much it is? 1,000 each. Yes, it's done. Then asset taken over by the partners. Partners capital account debtor to realization account. So to realization account. You can pass two separate entries and you can enter the concerned amount in concerned partners capital account, but no need of that. With one single entry, you can enter the amount in both the partners columns who took the assets, and here you can write assets taken over, and we'll do the same thing, assets taken over. Both are correct, remember, assets taken over. So how much? Kiran 10,000, right? 10,000, 8,000 Arjun. Anything else? I don't think so, right? Yes. Let us close it. No other interest, close it. Take the total of credit side first. 25,000, 25,000, 35 and 45. And 45. 45, 35 and 25. Write the same total on the other side. 45, 35 and 25. Now find out the difference. Here you will have the difference of 17,000, isn't it? Here you will have 25,000. Here the same amount, 45,000, because there are no debit entries here. So that is the final balance. Make payment to bank. Final payment made. Final payment made. That's all. It's done. Your combined capital account is done. Now let us move on to the last part. It is bank account. Bank account. Draw the columns. Particulars. JF amount in rupees. Pass all the entries. Bank account, it shows debit balance, right? Because it is on the asset side, cash at bank, 6,000. 6,000. So on the debit side, two balance brought down. How much? 6,000. Then there is sale of asset. Bank account related to realization account. So pass it on the debit side to realization account. Assets realized. Assets realized. How much? What is the amount? 141,500. 1,41,500. Refer this side. Realization account related to bank account. So bank account is credited by realization account. It is liabilities paid off by realization account. Liabilities paid. Liabilities paid. How much? Total amount. Take the total amount. 36,000, right? 36,000. Yes, it is. Then realization expenses are there. Realization account related to bank account. So bank account is credited by realization account. Expenses or cost of dissolution, right? How much it is? 2,500. 2,500. Then there is a loan of the partner. I told you loan should be repaid before paying their capital balances. Now before making capital balances payment, pay the loan, repay the loan of Arun, right? Arun's loan account. Arun's loan account, right here, loan repaid. Loan repaid. Repaid. That is how much? 22,000. 22,000. That's all. Now make payment of their capital balances by Arun's capital account. Arun's capital account. Final payment by Kiran's capital account. Kiran's capital account. Final payment and by Arjun's capital account. Arjun's capital account. Final payment. Final payment. How much? Right here, 45,000. 25,000. 17,000. Check whether it agrees or not. It agrees. 147,500. 147,500. That's all. Your problem is solved. Isn't it? Very simple it is. So dissolution, I think easily you can solve now. But I will solve some more problems. Don't worry. If I find it is a bit different, any adjustment is something new, then I will take up that problem and then we will close this chapter and we will move on to the first chapter, not for profit organization. If we cover that, then part 1 will be done. Part 2 already we have covered 2 chapters, issue of shares and debentures. Then later part, let us see whether we will get out of that is COVID or not. If it is not, then we have to continue again, wasn't it? Yes. Now take down assignment problem. Take problem number 13. Problem number 13, page number 75. Page number 75 as your assignment problem. Harish and Suresh are partners. That problem, solve it and submit it on time. And make sure you will not copy from others. Wasn't it? Yes. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.